You've already seen a couple of mortgage rate increases. We're still anticipating a couple of more rate increases before the end of the year. You know it's a good idea to have a household budget, but when you see those Excel sheets or apps, they seem to be built for tax lawyers or accountants. Now, there is a 50-30-20 budget rule that makes it simple. 50% of your net income after tax can go to your needs. 30% can go to your wants. 20% goes to your savings. Now, let me set the stage here. Let's assume that you bought a property, let's say a condo in Mississauga, for $750,000. Your household income is around $120,000, or your personal income is $120,000. Now, the way that works is that if you've owned that property for $750,000, and let's say you put 20% down, you have a mortgage of $600,000. Prior to the latest rate increase, your mortgage payment would have been around $2,305 per month. That's mortgage only. After the rate increase, the latest rate increase, it would be around $2,460. So that's $155 a month increase. Now, once we take into account property tax, condo fees, some utility costs, you're paying around $3,237 per month just on shelter cost. Now, when we go and take a look at that $120,000 income, that's approximately net $84,234, or around $7,020 a month. Now, if we apply that to that 50-30-20 rule, 50% of that $7,020 a month, which is $3,510, should be allocated for all your needs. Now, what do we classify as your needs? So your mortgage payment classifies as a need, or rent if you're renting. Property tax, utility costs, condo fees, those are all the shelter costs that's still classified as part of the need. Now, your credit card minimum payment is still classified as a need. Your car payment is technically classified as a need. So that's a financial responsibility. Groceries, because you gotta eat, right? If you use a car for work, that's a need as well. So there's a few things that we would classify as a need. I could tell you that groceries, telephone, water, your childcare cost, tuition, if you have any pet expenses, insurances, taxes, those are all considered needs. Now, if we just isolate how much that is, as I mentioned, it's $3,510 a month, and $3,237 of that is just for the shelter cost. You only have $273 a month. You haven't eaten, you haven't paid for insurance, you haven't paid for childcare, you haven't paid for your tuition, you haven't really paid any credit card payments on that, your minimum credit card payments, and your car loans and so on. So $270 a month is not a lot. Now, if we're anticipating any future rate increases, let's say another 50 basis points increase, that's another $155 to $160 a month further rate increase, or further per month payment. That $270 is now down to $110. So you can see that the need component for somebody that's bought a property right now at 20% down seems to be heavily weighted on shelter cost. 30% of that income, of that $7,020 a month, can be for the wants. Now, I'm not saying, if you're driving, if you're looking to buy a car, an economical car like a Toyota or a Honda or a Kia, something that's gonna do the work from a utility standpoint is on that component. But once you start moving up or leveling up to a BMW or a luxury car, obviously that's more of a want. Dining out or going out for movies are all in that want category. Vacation and hobbies are in that want category. Now, $7,020 a month is the total monthly net income. So around $2,100 can be allocated for your wants. Now, as you basically saw earlier, your need component is so so much so that your next thing that you're typically going to pinch out is your want. Now, there's this thing that needs versus want. Some people will say one thing as a need, like a bag or shoes, but it should be classified as a want. Now, 20% of your net income can be for savings. So that's around 1,400. Now, what are we saving for? We're saving for your just in case funds. We're saving for your retirement. Maybe using that savings to pay out that, car payment in full, or the credit card balance or line of credit balances in full. So that's typically a resource for us to help us rebalance your specific budget. So if you have a pretty high car payment or credit card payments or line of credit payments, maybe we'll use some of your savings to rebalance it so that it takes that monthly payment away out of the equation. So it frees up some more of your budget income per month to basically allocate for your need and the wants. Now, typically on our side, once we do we will work with clients on their family budget, but also we'll look at working with them on their personal net worth. Now, typically when I see a lot of payment on the car payment or big car loan or big balances on the unsecured debts like the credit cards, unsecured line of credit, or personal loans, those are typically triggers for me to see whether or not there's a good chance that we can rebalance their debt to free up some cash flow, but at the same time also rebalancing it to save some interest. If you have any needs, me and my team are here to help you. Just don't hesitate. Call, email, send me a message. Have a great day.